The people who move real money and silver were quietly backing up the truck while you sat on your hands. Not on the day the headlines screamed, on the boring days. The days nothing seemed to happen. The days the financial channels barely mentioned the metal at all. That is when the accumulation happened. And it happened in plain sight, in data anyone can read, and almost nobody looked. So let me answer the thing the title put in your head right up front, because you clicked to know if it is true. It is. There is a divergence buried in the positioning reports for silver, a split between the fast money that chases headlines and the steady hands that take delivery and hold. And for a long stretch now, those steady hands have been adding, while ordinary savers stood frozen on the sidelines, waiting for permission to move. You did not miss the whole thing, but you did miss the quiet part, and the quiet part is the part that matters. Here is the concrete thing to chew on before I go 1 inch further, and it does not depend on today's price or this week's headline. Silver has run a structural deficit for years running now, 6 straight and counting by the most serious industry tallies, meaning the world uses more of it every year than it digs out of the ground, and the gap gets filled by pulling metal out of vaults that were filled up in fatter times. That is not a forecast. That is a plumbing fact. And when the plumbing is draining, the question is never whether it matters. The question is only who noticed first. I have spent a long time in the gold and silver world, sitting across the table from people trying to protect what they spent 40 years building. And I will tell you the single most reliable pattern I have watched play out. The smart money and the physical buyers move first, quietly, in the data. The financial media notices last, loudly, at the top. And the ordinary saver, the person this whole video is for, gets the news exactly when it is most expensive to act on it. That is not an accident. That is the business model of the people who profit from your hesitation. Let me show you what I mean by the split, because once you see it, you cannot unsee it. In the positioning reports that track who is long and who is short in silver, there are broadly two very different animals. One is the managed money crowd, the funds, the trend followers, the fast desks. They are momentum machines. They pile in when the chart looks exciting, and they bolt for the exits the second it wobbles. And their footprints are all over every violent swing you have ever cursed at. The other animal is the commercial and physical side, the users, the refiners, the people who actually need the metal, and the people quietly standing for delivery and carrying it off the exchange into their own vaults. That side does not chase, it accumulates. And it accumulates most aggressively when the fast money is scared and the price looks ugly. Now, watch how the trick works, because this is where the big banks and the trading desks earn their living off your fear. When the managed money crowd gets spooked and dumps, the price drops fast and hard, and it looks like the whole world is selling silver. Your screen turns red. The financial channels, if they mention it at all, use words like slump and rout, and a saver watching that, a person who did everything right their whole life, feels their stomach drop and thinks, everyone is getting out. I should get out too. But that is a story about the fast money leaving. It is not a story about the metal. Underneath that red screen, the steady hands are often buying what the frightened funds are throwing away. Two completely different things are happening at once, and you are only shown one of them. I want you to meet the person I keep thinking about when I explain this, because he is who this is really about. Picture a machinist, 38 years on the floor, a man who spent his whole working life around the actual stuff. Silver in the contacts, silver in the solder, silver in 1,000 parts that pass through his hands. He retired with a decent nest egg, low 6 figures, everything he had. And when silver would lurch down on one of these fast money flushes, he would sit there and think he was a fool for ever paying attention to it, that the smart people must know something he did not. He had it exactly backwards. The people he thought were smart were the ones fleeing. The truly patient money was doing what he, of all people, understood in his bones, buying a real thing that the world cannot function without and is running short of. He just could not see it, because the only voices he heard were the loud ones, and the loud ones are always late. And here is where it gets stranger than most people realize. This is not just funds versus users. It is the whole global posture of who is quietly getting more physical and who is stuck holding paper. Central banks have been buying gold at a record pace, well over 1,000 tons a year, 3 years running now, roughly double what they averaged the decade before. Think about who that is. The most conservative, most risk-averse institutions on the planet, The ones whose entire job is to not get surprised decided all at once that they wanted more real metal in their own vaults. When the most cautious money on Earth moves first and moves hard, that is not noise. That is the tell. And it points straight at what you can actually do about it. So let me stop here and be useful for a minute. If you are sitting on $100,000 or more in a 401k or an IRA, and you have been watching the most careful institutions in the world quietly move a portion of their wealth into real metal while wondering whether you are allowed to do the same, the answer is yes, and it is more straightforward than the industry lets on. We put together a free guide called the Retirement Wealth Protection Guide. It walks you through how retirees move a portion of the money they already have into physical gold and silver inside the same retirement account, without taxes and without penalties. This is not just for insiders or the wealthy. If you have $100,000 or more in any retirement account, this is for you. If you are watching on your TV, scan the QR code on your screen right now. If you are on your phone or your computer, go to readfamilyguide.com. From our family to yours, no obligation, nothing to buy. Get the guide, read it at your kitchen table, and you will understand the machinery the big banks would rather you never learned. Now, let me be honest with you the way I would want someone to be honest with me, because trust is not built by telling you only the exciting half. None of this means silver goes straight up. It does not. This is one of the most volatile things you can own, and the same fast money flushes I just described can and will slam it lower even when every fundamental is pointing the other way. I have watched silver fall roughly a third in a matter of days, driven not by a single change in the actual supply and demand of the metal, but by the exchange raising the cost to hold a position, forcing leveraged traders to sell whether they wanted to or not. Nothing real changed. The metal was just as scarce the week after as the week before, but the price got cut like a knife anyway. So if you own silver, understand what you own. It is a long fuse, not a fireworks show. Anyone who tells you they know the day is selling you something. But here is what the volatility hides, and this is the part almost nobody gets to. Silver is not like gold in one crucial way, and it changes everything about that deficit I mentioned. Gold, when we buy it, gets hoarded. It goes into a vault or a drawer, and it sits. And almost all of it that has ever been mined is still sitting somewhere, which means it can always, in theory, come back to market. Silver gets burned. It gets used, dispersed in tiny amounts across solar panels and electronics and 1,000 industrial jobs, in quantities too small and too scattered to be worth digging back out. Gold is hoarded. Silver is consumed. So when the world runs a deficit in silver year after year, that metal is not resting in a vault waiting to reappear. It is gone, spread across rooftops and circuit boards, and it is not coming back. And it gets tighter than that, because you cannot simply flip a switch and mine more. Most silver does not come from silver mines. It comes out of the ground as a byproduct of mining copper and zinc and lead. So even when the price of silver doubles, the miners cannot just chase it, because their decisions are driven by the base metals, not by silver. Supply is stuck no matter how loud the demand gets. And at the same time, the biggest single driver of new demand, the solar and electrification build-out, needs silver in a way it cannot easily design out, because silver conducts better than anything else we have. Draining stockpiles, supply that cannot respond, demand that keeps climbing. That is the setup the steady hands can read and the fast money cannot be bothered to. You can see the pressure showing up in the physical market itself in ways that are hard to fake. The deliverable silver sitting in the exchange vaults, the metal actually available to satisfy contracts, has been drawn down toward multi-year lows as more buyers insist on taking the real thing instead of rolling a paper position. Over in China, the appetite for physical metal has been so strong that the Shanghai market has traded at a persistent premium to London and New York, pulling silver eastward, out of Western vaults and into hands that intend to keep it. When the real stuff commands a premium in one part of the world, that is the market whispering that paper and metal are not the same, and that someone, somewhere, would rather have the metal. Which brings me to the quiet fraud at the heart of the whole thing. There is far more silver that trades on paper than there is deliverable metal to back it. Many claims exist for each real ounce that can actually be handed over, and for most of history, that works fine. The same way a bank works fine, as long as everyone does not ask for their deposit on the same afternoon. The paper price and the metal price stay glued together because hardly anyone ever demands the physical. But the steady hands I keep pointing you toward are the ones who do demand it. They take delivery, they carry it off, and every ounce that leaves the system that way is an ounce that cannot be used to paper over the next shortage. The people who understand this are voting with their feet, one delivery at a time. And it does not show up on the financial channels because it does not make an exciting daily story. It only makes a decade. I have seen this movie before, and here is how it tends to go. There is a long, dull, discouraging stretch where the metal goes nowhere, where the patient buyers look foolish and the fast money laughs, and where the ordinary saver gives up right before it matters. Back in the middle of the last great run in the 1970s, gold did not go up in a clean line. It nearly halved in the middle of that bull market, cut roughly in two, and a whole generation of people concluded the story was over and sold. Then it went on to multiply many times over from there into its peak. The people who got shaken out in the ugly middle were technically right about the fear and completely wrong about the outcome. That is the trap. The middle is designed to make you quit. So let me name the fear directly, because I know some of you are living it right now. If you are holding silver and your stomach tightens every time you open the app, if you are starting to wonder whether the patient money was ever really there, or whether you talked yourself into a story, I understand that feeling completely, and I am not going to wave it away. That knot is real. But I want you to separate two things that the loud voices deliberately blur together. The price on a given afternoon is a story about who panicked. The metal in the ground, the deficit, the vaults draining, the most cautious institutions on earth quietly loading up, that is a story about where this ends. Do not let someone tell you the first story and pretend it is the second. Here is the recognition I most want you to walk away with, and it is the whole reason this matters today instead of someday. By the time this is obvious, it will be too late to be early. Right now, the accumulation is happening in the boring corners, in the delivery data, in the vault drawdowns, in the central bank ledgers, in premiums half a world away, and the mainstream has simply not connected the dots yet. The pension funds are not here. The financial talk shows are not leading with it. Your neighbor is not asking you about it at the barbecue. That silence is not evidence that nothing is happening. That silence is the opportunity. Because when it does finally break into the open, when every advisor starts recommending it and it leads the evening business segment, the patient money that moved during the quiet will already be sitting on the part that was easy. The crowd always arrives after the door has swung shut. You are hearing this while the door is still open, and that is worth more than any number I could put on a screen. That machinist I told you about, the one who thought he was a fool, he finally understood it when he stopped listening to the loud red screen and started asking a simpler question. Who is quietly buying the thing I spent my life bathing with, and why? Once he asked it that way, the answer was not confusing at all. The people who need the metal and the people who trust the metal were accumulating. The people who trade the headline were not. And the only person caught in the middle, frozen, waiting, was him. He was not too dumb to see it. He was just standing too close to the noise. So think honestly about your own position, not as a gamble, but as a foundation. Own an amount you can hold through an ugly stretch without ever being forced to sell at the worst possible moment, because the forced seller is the fast money's favorite meal, and you never want to be on that plate. Own the real thing where you can, the metal itself, not just a paper promise that only works until everyone asks for delivery at once. And never, ever sell into the bottom of a fear-driven flush just because the loud voices told you the world was ending. Those are principles, not a prescription. And the honest truth is, I cannot know the day or the level. But I can tell you which side of that positioning split has been right across the long arc of my career. And it has not been the side that chases headlines. Which is exactly why I want to leave you with the whole picture, and not just the part for you. This is not only about protecting what you built. It is about what you pass on. The decision to move a portion of your wealth into something real, something that cannot be printed and cannot be frozen and does not depend on anyone else keeping a promise, is a decision your children and your grandchildren inherit right along with the metal. So here is the last thing I will ask of you. Get the free Retirement Wealth Protection Guide. If you are on your TV, scan the QR code on your screen. If you are on your phone or your computer, go to readfamilyguy.com. And for those of you with $100,000 or more in a retirement account who watch this all the way through, mention that when you reach out, and we will set up a free one-on-one educational web conference, just you and someone from our family, to walk through how this actually works for your situation. There is no fake deadline here, and I would not insult you with one. But understand this. The window where a decision like this is still calm, still cheap, still fully reversible is exactly the window when nothing feels urgent. That window is open right now, in the quiet, before the crowd. From our family to yours. So let me end where I began, with the truth the title promised you. The smart money loaded silver while you waited, yes, but not because they were smarter than you. They simply read the boring data instead of the loud headlines, and the boring data told them metal was quietly walking out the door. You now know the same thing they did. The only question left is whether you stay frozen, watching the red screen, like that machinist almost did, or whether you finally ask the simple question he did. Who is really buying, and why? Answer that honestly, and you will never again mistake the noise for the story.